gives it a push in one direction or another on that score.
Well, I can't wait to see what happens over the next 30 minutes or so. Don't go anywhere. I'll see you tomorrow, but overtime, right now, it's on point.
All right, there we go. We've got the closing bell. Congratulations. It is time for Nvidia earnings, and we are expecting a lot of drama. Nvidia, oh man, we're going to go ahead and pull up the estimates on Nvidia so we can see exactly what's on deck for Nvidia here. We've also got Snowflake and Autodesk coming out. We're going to be covering these as they come out because Nvidia is scheduled for a little bit later. For the other ones, it's scheduled for 1:20, so we'll be covering that. It is worth noting that the earnings estimates, though, for Nvidia as we go into this, we are looking at earnings EPS of $2.07. We're looking at about a 10.4% expected volatility. Nvidia has beat 7 out of 8 of the last times on EPS adjusted, EPS GAAP, and then revenue. However, net income has beat 6 out of 8 times. So it generally beats here. We'll go ahead and see what happens with Nvidia. I think everybody's very excited because this is the definition of the AI movement. Is it about to skyrocket or not? So we're going to take a peek at this. Again, we're also going to look at Snowflake and Autodesk as the numbers come across the tape. Both of them, by the way, definitely considered AI plays. Okay, Autodesk is in. Autodesk announces adjusted EPS 191. The estimate was 173. We're looking at operating income of 489 versus 459. That's a beat on operating income, beat on adjusted EPS. Net revenue for Autodesk, 1.35 billion versus the 132 expected. We're looking at operating margins at 36% instead of 34.8. So that's a beat on Autodesk. We'll go through some of these notes in just a moment. As we wait for Snowflake as well. Again, Nvidia earnings not expected to come out until 20 minutes after the hour. We will be keeping a close eye on those to see if they come out early. They are not out yet. Snowflake is not out yet. Just Autodesk out so far. We are, give me 1 second here. Let's see here. Here we go. Okay, we are looking for as much information as we can get on Nvidia's AI potential sales, mostly because they're going to be a big signal to how much revenue in terms of revenue beats could we expect in the future for all of the cloud providers, whether it's Google, Microsoft, Amazon, Facebook to some extent. We just analyzed Facebook in deep detail this morning in the course member live stream. And, there's a lot of investment going into AI. The big beneficiary of this is Nvidia. But if these companies aren't getting a return on the investments they're making, guess what they're going to do? Well, they'll stop investing in AI. And if they stop investing in AI, what happens then? Well, then all of a sudden, your expectations of future and continued orders at Nvidia would fall. That is why a lot of people are really focused on these Nvidia earnings today, because of expectations for the long run. What are we looking for going forward in the long run for earnings on Nvidia and AI related plays? I still think one of your pure play AI stocks is, quite frankly, Tesla. I think it's actually probably your best style of pure play AI. And the reason for that is you're actually looking at a company that uses artificial intelligence on a daily basis in its full self-driving technology. That's not something that a lot of the sort of AI software companies that just use the GPT plugins can really brag about beyond having plugged in GPT. And the question is, how much are people incorporating that into their daily lives? Right? With Tesla, you're incorporating the full self-driving into your life. Once you're used to using it, you incorporate full self-driving on a regular basis. Whereas how many people are actually opening up GPT on a daily basis? TBD. And of course, the GPT related apps. This could be, Bard being another version, Lattice over at Meta. How much demand is there really for generative AI? And really, that's what NVIDIA is going to tell us here. I don't think it's necessarily going to be the NVIDIA earnings themselves. It's going to be the guidance. Because here's my take. I believe GPT mania hit. GPT mania hits. What does everybody do? They pick up the phone and say, NVIDIA, we need H100s. We need the best crap you got. NVIDIA's like, okay, we'll start printing more. Yo, TSM, we need more. And they're like, yo, we don't have capacity for all of this yet. We'll make you as many as we can, but we'll just do what we can. That's why TSM earnings were somewhat disappointing, because they just didn't have the capacity to get it out. The question now, though, is what happens when that hype dies down? What happens when the hype is gone? Or the cloud computing companies and the other software-related companies calling up NVIDIA going, we need more H100s. Are the data centers being built out to support AI needs? So we'll see. You know, everything's going to be in that guide here for NVIDIA. I don't really think it's in the earnings. It's all about the guide, because here's the worst case scenario. Worst case scenario is NVIDIA guides a miss, right? And they're like, hey, basically they signal maybe the AI thing was just a fad. Like, hey, it's going to increase incremental revenue, but it's not going to be anywhere near as great as we thought. Back when everybody was talking about GPT and AI. If that happens, NVIDIA tanks, because right now people are pricing, I mean, the market's pricing in 25% year-over-year CAGR for NVIDIA, compounded annual growth rate. It is entirely possible, though, that NVIDIA grows at more than that. My personal estimate is that NVIDIA grows at 30%. But if you have people making bets, NVIDIA is going to grow at 50% CAGR for the next 4 years, based on AI not being a fad, and then AI is somewhat of a flash in the pan. Yeah, it increases revenue incrementally, but it's not that great. Then this stock tanks. So nobody knows. I think going into it, we know that the vast majority of people using GPT-related apps who first used them in February might not still be using them. I actually, in our How to Make More Money course, which is like an entrepreneurial course, and how to make more money at your job, and you know, tax strategies and stuff like that, we included an AI segment. And in that, we discussed, look, here are tools that aren't a flash in the pan. Here are things you can actually use and incorporate into your daily life. But I think the number of people who actually try to incorporate AI into their daily lives is probably under 10%. That's because, frankly, only about 50% of people have actually even tried, or 50% of people have actually heard about GPT based on the latest research that we've been studying. 50% of people have heard about GPT. So it's like 50, like, you know, every other person knows about GPT. But only like 20% of those people have actually tried it. And then of that number, I think only 10% actually use it on a daily basis. I do think there are programmers, and I use it on a daily basis, right? I do think there are a lot of people who use it. Don't get me wrong. It's a great product. But I think its momentum had its shine. That's a potential red flag, maybe, or not. And the question for that is there a chance that maybe the consumer isn't super excited about AI? Maybe businesses are. And that's really important, because if businesses are excited about AI, then they make the investments, then NVIDIA does well. Okay, Snowflake came out. Snowflake beat estimates, 674 versus the 662 expected for Snowflake. Product revenue, 640 versus the 224.9 expected. Snowflake sees fiscal year product revenue at 2.6 billion. That's roughly in line. Q3 product rev, a little bit of a miss there on Q3 product rev, looking at 672.5 versus 674.9. That is, again, Snowflake here. They did beat on EPS, coming in with a quarter versus a dime expected, and still growing at somewhere around 28 to 29%. So I will pull up the GPT Google trends here. This is interest over time. As you can see, the relative strength of GPT peaked out around the week of April 23rd and the end of March. So end of March, middle of April, that was your GPT era. Your relative strength has since declined to about 73. So it's about a 27% decline. We actually are on a rising trend, though, from a low relative strength around the beginning of June of just 43 for chat. Oh, that's chat G. Oops. I thought I filled in all the way GPT. There you go. Actually, if you type it correctly, chat GPT, The relative strength actually correctly did peak around the same time, April 23rd, similar peak, same thing in March. But you have actually declined from a relative strength of, well, 100. You've actually declined down to about half as of now here in August 13th. And we've been relatively stable since the beginning of July at about half the search volume that we had during peak time. So we'll keep an eye on that. Watching Nvidia now, we still do not have the Nvidia results. Snowflake, Autodesk out, both with beats. We are, keep in mind, later today going to be covering the Republican debate and the Donald Trump Tucker Carlson video live. I'll be covering both of those, and I'll cover them in order. So keep that in mind. That is 6 p.m. California tonight. That's going to be the Republican debate and Trump Carlson video. So stay tuned for that. Mark your calendar for that. I'm kind of planning to have like a little sort of personal in the office here, like, I don't know, pizza or party or whatever, and we can kind of hang out and go through it together. So stay tuned for that. We are on standby for NVIDIA. NVIDIA is expected to release in the next 9 minutes. So we've got about 9 minutes to go for NVIDIA. That does give us a chance to hop into Snowflake or Autodesk here. I think what we'll probably do is we'll jump into Snowflake just for a moment, just as long as we wait for the NVIDIA earnings. And what we'll do is we'll look at some of their cash flow and some of their numbers beyond what I've already read off. And the reason for that is Snowflake really is a, dare I say, look, Snowflake was always a big data play. Big data today has basically just been redefined as artificial intelligence, right? They're conclusions based on big data, and that's really what AI is trying to accomplish. So I'm going to go pull right now the Snowflake investor relations press release, and then we'll go through that. We'll spend about 8 minutes or so on that while we wait for NVIDIA. Keep in mind, we are getting stock market reaction. Snow is down about 0.5% in after hours here, after being up 2% on the day. Autodesk actually doing quite well, up 6%. I have exposure to Autodesk, and no exposure to Snowflake. But Autodesk is up about 6% in after hours here. I do also, in transparency, have exposure to NVIDIA. Not as much as I'd like, but I really want to see, is this flash in the pan or not? And then we can always allocate appropriately. So not a big fan of speculating on that one. Okay, so we're gonna grab the Snowflake press release. It doesn't look like their PDF is loading at the moment. Oh, we got it. Okay, stand by, throwing their investor presentation in, and I'm going to be looking for the financial tables on Snowflake. This is a company that I would expect to use a lot of server bandwidth for artificial intelligence, and I'm curious about what we're seeing in CapEx as well. So financial tables, these are all the non-gaps. Oh, come on. I got their slide deck, but if you know me, I'm not the biggest fan of slide decks. I like getting the actual gap earnings. I may not be able to get those as quickly as I'd like. Stand by, quarterly results. We're going to try one more place to get financial tables. Q2, here we go. Got it. Okay, this is going to be Snowflake. So we'll go through Snowflake for just a few minutes here. And we will pop this PDF up on screen in just a moment. In the meantime, we are still a few minutes away from our NVIDIA press release. And that NVIDIA press release is expected in the next about 2 minutes. We do have the earnings call for NVIDIA as well, scheduled at 2 p.m. 2 p.m. for the earnings call. That's in about 46-ish minutes. So that gives about 40 minutes between the release of the investor information and their earnings call, where we expect to get also a lot of clarity on the guidance for chip manufacturing, as well as demand for these chips. I personally think there'll be a lot of complaining about how slow TSMC is at being able to get these chips out. I think that is highly expected. So I would expect NVIDIA to say something to the effect of, hey, like, we'd be able to do better if TSM would get more chips out. That would not be a surprise, but anything that's not a surprise is not really going to move the stock. What would be more of a surprise would be something like, hey, wow, we thought the revenue would be a lot greater, but we're actually getting order cancellations or something like that, right? That would be problematic. So anyway, here's the Snowflake data. So we're gonna go right to the numbers. Here's the cash flow for Snowflake while we wait for Nvidia. Snowflake sitting at a negative $227 million net loss. You can see that they're paying $300 million out in stock-based comp. And folks, this is in a 3-month period. Oh my gosh, I want to work for Snowflake. In a 3-month period, they literally paid out $300 million of stock-based comp. Snowflake, how many employees? Let's find out how many employees they have. They have 5,884 employees. 300 million divided by 5,884 is an average of $51,000 of stock-based comp on average per employee. 51K SBC per employee average. Now, obviously, keep in mind that's probably going to be heavily skewed towards the executive side for Snowflake here, but wow, that's a lot of SBC. So then we have not much depreciation at Snowflake. That makes sense. We're not expecting a lot of buildings here. Plant, property, equipment expenses relatively low here at 6.3. Makes sense. This is not a manufacturer. This is a SaaS business. So we've got some cash flow here. So we've got free cash flow sitting around 75 mil. 75 mil of free cash flow while they're writing off losses thanks to all the stock-based comp. Again, this is Snowflake. We are waiting for Nvidia coming out within the next 4 minutes here. Then we have a revenue for the 3 months ending July 31st. We're looking at product revenue. This is where most of their money comes from. Their product is a service. We are at $640 million. This is actually very incredible growth because if we line this up, we've got 640 divided by 466. This is year-over-year growth of 37% year-over-year growth at Snowflake. 37%. I'll draw this little line to connect the two. My bad. There we go. We've got profit margin. Let's see, costs of revenue. These are the GAAP costs of revenue. We're looking at about $169 million. 169 divided by 674 for their total puts them at about a 75% margin. So, yep, 25%. That's okay. They've already put our margin together here as a percentage of revenue. Perfect. So you can actually see margin improvement at Snowflake. Pretty impressive. So margin's going up. The growth is going nuts here. I'd like to see the OpEx, like the marketing expenses here. So looking for marketing expenses. This is such a mess here with all their GAAP and non-GAAP expenses. Here are the R&D expenses. Okay, here's the OpEx. This is how they get to a loss, right? Sales and marketing expenses are up to 343 million. 343 divided by 274 is putting us up about 25%. But remember, their marketing went up 25%, but they grew revenues at 37%. So that's pretty good. Their R&D, though, that's a big bump in R&D. That's 314 in R&D, and we're looking at 183.7 last. That's a 71% increase in R&D. I wonder how much of this is an AI push into, oh my gosh, we have to adapt or die. So this would be a little bit concerning to me, this explosion here in R&D. I'm sure there's an explanation for it. I've got about 2 minutes to see if I can figure it out. Let's see if we can find it. Forward-looking statements, net retention, performance. Okay, product rev, key business metrics. That's fine. Any heads up here on why their R&D exploded like this? See, look at this. Cannot have an AI strategy without a data strategy. Of course, Snowflake is going to pitch AI as much as they can. It'll help prop up their shares. It's not a surprise. We'll have to probably get to their earnings call or their 10Q to get a manager's note explanation on why R&D exploded this way. but we don't have that here. I'm going to see quickly if I see anything in Snowflake. Nope, nothing on the wire about Snowflake. So this research and development explosion is pretty wild. They do have quick eyeball look, 2.7 billion in cash. They've got almost no bills to pay or debt here. This is actually really incredible. There's basically no debt here other than some payables and then lease liabilities. This is basically no debt. I mean, deferred revenue, I don't see as debt. This is fantastic. Obviously, that's the GAAP accounting method. So we'll respect that. But yeah, that sales and marketing bump is very interesting. Wait a sec. I'm sorry, not the sales and marketing bump, because that was about 25%. It's the R&D bump right here. That was pretty incredible for Snowflake. So keep an eye on this. And then they're making interest on their short-term investments. Okay, very good. Now we are on deck for Nvidia. This is a big deal. Honestly, this could make or break the market. So we'll see what happens. Okay, here it comes. Data center. Data center revenue comes in at 10.3. Big beat versus the 7.98 expected. Big beat on data center. Massive beat on data center. Automotive revenue misses. 253 versus 309.4. Gaming revenue beats. 2.49 versus 2.38. EPS, massive beat. EPS comes in at 2.7 versus, oh my God, these numbers are insane. EPS comes in at 2.7 versus 2.07. Gross margin beats 71.2 versus 70.1. Holy crap, the forecast is amazing. Absolutely amazing forecast. Nvidia is only up 4-5% in after hours right now, but this is actually incredible. This right here means it is not a flash in the pan. This is $16 billion of forecast Q3 revenue versus the 12.5 expected. This is a massive beat. Nvidia is now approving an additional $25 billion in share repurchases. Holy smokes. This is the place to be. This is, at least at the moment, this is not a flash in the pan. This is amazing. Again, even as we were saying, even if the consumer's interest in AI goes down, what we're seeing here with companies investing in AI chips, absolutely incredible. We are going to get the press release in just a moment from Nvidia. I'm waiting for that to post right now. I'm getting this through the wires. But this is a fantastic beat by Nvidia. These numbers are absolutely incredible. Waiting for more numbers to come through. Yeah, there's the 8K now coming through the SEC website. I'm grabbing that. We've got let's see, 25 billion of repurchases. The explosion here. I mean, I just want you to understand the magnitude of this. $16 billion of Q3 revenue forecast is actually 28% higher than what we previously expected for Nvidia. This is insane. We do have a comment here. Jensen says, the CEO and founder, a new computing era has begun. Companies worldwide are transforming from a general purpose to accelerated computing and generative AI platform. The data center revenue, absolute blowout and a record. Very, very, very impressive results here. The 8K is live. I'm pulling it up right now as we speak to get it into PDF here so we can go through the actual numbers here. But this is a phenomenal beat. The stock's up about 6.7% right now. I would not be surprised for this stock to be up even more. This is a very good beat. And I wouldn't be surprised to see this actually help drive after hours AI boosts at other companies. Tesla's up 1.9%. Facebook's up 1.3%. You've got Intel up 0.3%. Microsoft up about 2% in after hours. If I jump into TSM, manufacturer of these Nvidia chips, up 2.6%. Nvidia now up 8% on this absolutely incredible beat. And not a surprise at all. Very, 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 very good numbers here. So we're now waiting for, hold on a sec. We've got rosy outlook, sign AI spend remains insatiable. Broadcom follows, chip maker peers follow. Yep, blah, 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 blah. Okay, good. All right, let's now get into the actual, there it is, folks, the press release for NVIDIA. You ready for this? Let's dive into this. Gavin. Sorry, I downloaded the 8K, which is like the page that links the actual press release. I hate that crap. I got it. Hold on one second. All right, here we go. But this is absolutely phenomenal. Keep in mind, they're comparing to a whole of last year. So you do not want to compare the NVIDIA numbers to last year. You want to compare them to last quarter. Okay. All right, here we go. Let's get right into the numbers. Where's the cash flow, baby? Let's look at the cash flow. I want to see the cash flow, baby. Cash flow from operating activities, $6.188 billion of net income. Net cash created by operating activities, $6.3 billion of cash flow. Free cash flow comes in basically at $6 billion. Holy crap. $6 billion of free cash flow. Holy smokes, you cannot bet against this company, at least not at this point. Now, a lot of that appears to be, what do we have here? Stock-based comp was almost $1 billion actually in 3 months. Wow, that's actually a lot of stock-based comp. Look at that, 843 mil, and you can't blame it. How many employees does Nvidia have? They've got about 26,000. 26. Okay, we're gonna do. Sounds like Snowflake's paying more stock-based comp. Divided by 26,196. We're looking at, an average of about 32,000 in stock-based comp per employee. Obviously, that skews or is skewed by stock-based comp awarded by or to the executives. It's 32K average per employee. We've got accounts. Let's see here. We are subtracting. We're adding back in accrued liability. Okay. Yep. Okay, that's fine. So let's go jump into. I mean, this is actually an explosion. I'm just looking at this accounts receivable number here. Accounts receivable $3 billion. That's usually what they did in the 6 months. I mean, they have just as many receivables now as they had in the 6 months ending now. That's pretty wild. So they're getting a lot of deposits here. So current cash, $16 billion cash, and marketable securities. So you're at 16 billies, not including receivables of inventory or inventories. 16 bill. Let's write that a little cleaner. 16 billion cash, basically. We're looking at bills to pay of 9, 10. Give it the whole 10.3. Long-term debt, not including the lease, is another 10. So you've got about 20 in debt. Right? Not including leases. So, I mean, plenty with the free cash flow here. I mean, they could be debt free. They could pay back. They could do stock buyback. They could do whatever they want. It looks like in the quarter, they bought more marketable securities. So these are probably going to be, short-term yielding instruments. This is very likely to be, just short-term treasuries as, as we can see here, proceeds and maturities. Then we have acquisition. Okay, nominal other changes here. No new financing. It doesn't. Let me see here. Do we have any financing? We have payments related to repurchases of common stock. They bought back $3 billion. So of buybacks in this quarter, $3 billion in buybacks. I'd like to find out in the earnings calls what price, because that's going to give us probably a little bit of a floor. Like, where are they doing these buybacks? Right, at what level? They're starting to repay some debt. I like to see that. That's very good. Paid off 1.2 billion debt. Very, very nice. Excuse me. They paid out a fraction of dividends here. Some RSUs. Very good. We're now going to look at revenue. Let's see how that margin is moving. Okay, ready for margin on Nvidia. We are looking at 13,507. First of all, I want to see, do I really care about the growth? Yeah, okay, I'll do it because I want to compare the 6 months. We know comparing to last year is comparing into a whole, right? But we're basically 2x where we were last year. But watch what I'm going to do here, okay? So I'm going to do something on purpose here. So what I want to do is I want to compare. So this right here is 2022. And I'm going to compare this 6-month period right here to the 6-month period of 2023. And then what I'm going to do is I'm going to compare the 3-month period And I want to see if the growth rates have changed. Okay, so I think that visually helps a little bit, and that'll make more sense in just a moment. So as we do a year-over-year comparison, the 6 month, this right here, comes out to a 2x. All right, basically a clear 2x. So what is the 3 month move? So let's see here. Oh, sorry. Hold on. Did I do this right? No. I did the 3 month. The 3 month was a 2x. My bad. Stand by. There we go. This we did was a 2x. Now we're going to look at the 6 month. Yeah, because what we did is we took, and I'm only looking at, in this case, revenue. Comparing revenue here to here, that's the 3 month period. Now we're going to do the 6 month period. 2699 divided by 14992. That is growth of 38%. Right. So here's the company that's growing at 38% on a 6 month period year over year. But most of the growth actually happened in the months to get to that double. Most of the growth, unless for some reason the beginning of 2022 was a massive hole, assuming it wasn't a massive hole, the growth that we just got was mostly in, that would be May, June, July. This is actually post peak GPT. This is a signal that businesses are going all in on new server tech, which is reiterated by the data center beat. So all of the Facebooks, the Microsofts, here's what it is. Microsoft, Meta, Google, they know AI is here to stay. Consumers may think it's a flash in the pan, but consumers aren't buying $25,000 H100 chips. The big boys are. This is a strong long-term indication of profit and staying power and staying and pricing power. This is big. This is amazing. I'm actually personally very, very happy about this. We'll see what happens in the earnings call if they end up screwing it up. But we'll see what happens here. Okay, so all right. So let's see let's look at the margin that we're getting on these products. Now, keep in mind, Nvidia is a chip designer. Coffee. They do not make the chips. They design the chips. Other people may manufacture and then co-brand these chips when they go to sell them. So now we're going to do margin. Doing a margin analysis for now is going to put us at a gross profit of 9,462 divided by 13,507 puts me at 30%. 30% cost, right? 30% cost, 70% profit, gross profit. That's so juicy. That number last year was 2915 divided by 6704. Oh my gosh. That number last year was 43.5%. That's insane. But again, last year was rough. We know that. Let's look at the 6 month trend. 14,110 in gross profit, 2699, 68.1%. This is how we got the margin beat. So that is a margin improvement in just the last 6 months. That's pricing power, baby. That is definitely pricing power. This is a killer stock. This is absolutely incredible. Okay, now we are looking at R&D expenses up marginally year over year. I mean, maybe only up about 10%. It's basically they're not even having to spend that much more money on R&D. Now it's just milk mode. Not even much more on R&D. It's milking time. That's pretty wild. This is a SG&A. I mean, they didn't even have to sell more. SG&A barely moved year over year. It sells itself. Theoretically, I mean, I'm being a little facetious here, but this is phenomenal. Wow. I don't think there's anybody today who doesn't wish they had a bigger Nvidia position after this. This is really, really incredible. Let's get a little bit more into some of the things they're saying. So these are some of the things we read off earlier. What I'm going to do is I'm going to go ahead and write down the estimates next to some of the numbers they're providing us here. So this data center revenue of 10.3 billion, I want you to see the actual estimate here. Stand by for just a second here. Data center, there it is. Okay. So data center, the estimate was 10.3. I'm sorry. That's what it was. The estimate was 7.98 billion. That is a beat from the already glorious estimate of what, like 30%? 10.32 divided by 7.30 or 29.3%. Wow, that's a juicy beat. Okay, so Nvidia today reported revenue for the second quarter up 101% from a year ago, up 88% from the second quarter. The second quarter is what I care about because this is actually, well, hold on, from the previous quarter, not the second quarter, because this is the second quarter. That is amazing. Remember, their second quarter would have been March, April, May. No, February, March, April was their prior quarter, rather. The current quarter is May, June, July. Okay, good. New era of computing has begun. There's that quote we read out earlier. This came across the wire from the CEO. We've got NVIDIA GPUs connected by our networking and switch technologies running CUDA AI software stack make up the computing infrastructure of generative AI. This is a moat, folks. This is a massive, massive moat by NVIDIA. I mean, this is really incredible. So, I mean, massive congratulations here. Wow, this is amazing. Okay, so data center. I want to get some numbers here. Announced the GH200 Grace Hopper super chip for complex AI is shipping this quarter. Second generation HBM3 Echo memory expected to ship in the Q2 of 2024. Announcing a new L40S GPU. That's your universal data center processor. Okay. More, let's see here. Omniverse application, Spectrum X, that's for Ethernet-based AI clouds. You've got, because they also operate on with the InfiniBand. Is it? I want to see that. Hold on. InfiniBand's a big deal for, what's it called? Servers. And InfiniBand is NVIDIA's platform as well, or at least they work with the InfiniBand platform. So that's a pretty big deal. That probably is what this Spectrum X is. Spectrum X Ethernet networking. InfiniBand's slightly different. Okay, but anyway, whatever. Fantastic for servers. Launch general availability of cloud instances based on H100 Tensor Core GPUs with Amazon Web Services. Wow. And Microsoft. That's what I'm saying. The big boys, they're signing up for NVIDIA. They got to order those chips. ServiceNow and Accenture to develop AI Lighthouse. Fast track the development of AI enterprise solutions. VMware to extend its partnership. Snowflake accelerated AI applications using its big data, basically. SoftBank to create a platform for generative AI 5G, 6G applications. That's interesting. Hugging Face to give developers access to NVIDIA DGX, cloud AI supercomputing. Okay. Second quarter revenue, we covered. Began shipping the NVIDIA 4060 GPUs for gamers. I'm actually, right here next to me, I have an NVIDIA 4090 and a 4080. I'm actually running Reuters and Bloomberg on both of them. But anyway, it's great. Okay, second quarter revenue. Okay, we talked about that. RTX, that's fine. Some of these numbers. That's fine. What do we have here? OpenUSD, fine. Join Pixar, Adobe, Apple, Autodesk to form an alliance for OpenUSD to promote the standardization of universal scene description technology, fine. Automotive revenue got hit. Second quarter revenue was down 15%. These are, NVIDIA's drive platform powers actually a lot of the different ADAS softwares, whether it's something like in a BMW or Xpeng or otherwise. So I find these very interesting. In fact, if we go to the 10K, we can get a little bit more of an explanation. We are 20 minutes away, by the way, from the earnings call. So let me get the NVIDIA annual quickly, and then I can give a little bit more commentary on some of these individual products, which I think is very useful. So the way we like to do that is we just go get the Q4 10K. And then we're going to go under business. And I'm going to look for some of the juice here. Okay, so our businesses. So if we go under automotive, this is automotive, AI. NVIDIA's automotive market is comprised of AV, AI, cockpit, electric vehicle, computing platforms, infotainment platforms, drive, Hyperion band. We've got AI can drive the car, co-pilot the car, making the car safer. That's fine. Trying to see if they've announced any partnerships in here. They do not in their 10K. I'm actually surprised by that. I thought they would have given us a little bit more, but they also operate on basically enabling some of the legacy autos to get over-the-air software updates, something that Tesla does. So NVIDIA is probably playing a little bit of a catch-up to Tesla in the automotive space. But boy, I mean, the data center is what everybody cares about right now. And it's the companies like Google and Microsoft that are not suffering like individual consumers are. They have a ton of extra cash and cash flow, so they can buy these chips all day long. They just want to get their hands on them as soon as possible. Software development kits for CUDA growing. For deep learning, machine learning, AI. Right. Okay. So what else? 20 minutes for the earnings call. We may as well cover some of the earnings call together, if not all of it. CUDA programming, by the way, started back in 2006, and there's some of the fundamental building blocks for the it's basically, a programming model or tool for building AI applications. So they call CUDA the fundamental building block. And CUDA has created one hell of a moat in terms of even people's interest in using it. I mean, if you're going to create an AI application, you want to be fast. Why try something new if you could just run with NVIDIA? Pretty incredible. So stock currently is up about 8.6%. Autodesk up about 6.19%. Tesla up 1.44%. TSM's up about 3% here. Thoughts on this solidifying the market's tech bullishness? It 100% does. 100%. All right, let's see here. Earnings call soon. We know that. Let's get some more here. Automotive sucked. We know that. But that's not a surprise with interest rates and the automotive slowdown. Again, I mean, like, the people making who have the money to spend right now are the companies buying the NVIDIA chips. But I'm actually surprised gaming beat too. Look at gaming. Gaming expectations were 2.38 was the estimate. 2.38 was the est. And I'm going to put call here in the title really quick as well, because we'll go cover the call as well. So I'm excited about the call. That call, again, starts in about 15 minutes. So we'll cover that. But so far, this is phenomenal. Really, really incredible. Okay. Stand by 1 second. We'll keep reading here. And I'll get some more information from the tape as well. Okay. So we have NVIDIA now. Oh, yeah. It's let me see this here. NVIDIA is now, wow, at $512 a share. Oh my gosh, that's amazing. So there goes 500. Let's see here. Okay, touched on Snowflake, touched on Autodesk. Looking for some more commentary before we get into the call. Okay. So if I look at a little more commentary here from Wall Street, it looks like Nvidia is now the first ever semiconductor company to hit $1 trillion market cap. That's pretty incredible. So welcome to the $1 trillion club. Yeah, data centers, what's exploding. OpenAI. Okay. All right. Let's see what else we have here. Nvidia. I want to see if I can get some institutional reactions here. Nvidia's CEO's net worth has exploded. Some people are calling this the stock market or the Super Bowl of the stock market in terms of earnings. I mean, no doubt these are absolutely incredible. Some people now wondering if Nvidia canceled the recession. I'm also curious if Nvidia's forward earnings are now going to get adjusted a lot. Yeah, Wall Street is still indicating $8 for full year EPS, but we just pulled off $2.48 in the quarter. That's going to put us closer to $9 to $10 in earnings. So this means that if we get, if we're at, say we're at $520 tomorrow, and you divide that by $9.50 in earnings, this company's trading for 54.7 times. And I believe they're growing at 30%. Wall Street has them at 25%. I've put them at 30%. If I go with 30, this company's trading for a 1.82 peg. I mean, the company's trading less expensively than Tesla. And it's in a market where people are spending money. It's actually really, really incredible. So, wow. Okay. Very, very good. Let's see what else we have here. Let's see what news this is for a moment.
Right, John. CVS is partnering with drug maker Sandoz to make a biosimilar version of Humira at 80% below list price.
All right, yeah, no, it's not interesting right now. I thought maybe they'd have some more breaking news on something, but they really didn't. Okay, so wow, yeah, the expectations were right on. We were looking for about a 10% movement in volatility. I'm going to look at the implied volatility here on Nvidia. And let's see how those options play out. So implied volatility was pretty high going into earnings. It was nowhere near as high as the post last earnings volatility. But I wonder if volatility will actually spike tomorrow, given that the stock appears to be up about 9% right now. But this is really good, and it's good for the broader market too. Like if you had a miss here, you could have crashed the entire stock market because the one thing really holding up the market would have absolutely destroyed the market if we had a big miss here. So this is great. This is also, by the way, really great news for the ARM IPO. I personally prefer Nvidia every day of the week over the ARM IPO. But boy, oh boy, this is good for the entire sector. All right, we're going to do the Nvidia earnings call in about 11 minutes. So I'm waiting for the earnings call stream to start, and then we'll go ahead and present that together, and we will add commentary, obviously. So we'll give that a moment here to get this pulled up quickly. So stand by for a moment. Yeah, is it Woolulu time? Woolulu. Yeah, that's funny. So, but yeah, I mean, there were a lot of people. In fact, I had a course member this morning. They're like, hey, should I go short $100,000 on the NASDAQ? And I'm like, I wouldn't do that right now, but the hashtag, I don't know your situation, not personal financial advice. Yeah, I hope they didn't do it. But that is because this alone is going to move the NASDAQ, you know, a chunk. Let's see how much we're moving in futures right now. So if we go QQQ, yeah, we're up basically 1% on QQQ. So yeah, let's see here. Okay. Nvidia earnings call in 10 minutes, so stand by for that. Let's see. There we go. Miss the old monks on Age of Empires. Age of Empires is such a great game. All right. So next up is really seeing how the market digests and reacts to all of this excitement over the next couple days to even weeks. I do think there is a JPOW dip potential that I would just be cautious of. The JPOW dip depends on what JPOW decides to do on Friday. If, you know, he talks about still not being comfortable and having softened the economy enough, despite the fact that inflation is falling, wages are falling, and consumer spend is falling, you know, it's it's going to hurt the market. But I mean, really, this is so incredible. I think it's it makes sense. You know, I mean, look at it from an outside point of view. If you're like, who has money to spend right now? Big companies do. Who doesn't have much money to spend right now? Consumers. Okay. Who benefits from big companies spending money? Nvidia. All right. So anyway, 9 minutes now from this. We're going to go get a little bit more commentary here. Let me see what else I can find. So we've covered so much already. Okay, I, by the way, have the Nvidia earnings call up and ready to roll. So we're going to be, let me see if there's any music on it. There is. Yeah, okay, good. So we have the Nvidia earnings call ready to go. And I'm going to leave that right here and muted. So that's ready to go. While we wait for that, let's see here. Other commentary. Generative AI boom. Services needed to run GPT and otherwise. I use this stuff, the AI tools that we talk about in the courses I use every single day. I mean, we even use AI at HouseHack. And we've been doing that before the latest boom. Keep in mind, by the way, we are targeting September 1st for being able to raise for HouseHack. That's actually, I think, the first time I've mentioned a target date. I hope it doesn't get delayed, but we're targeting September 1st. What's remarkable is we're setting up the HouseHack investment at a 1-to-1 investment, which means you invest $1, the valuation is at that same dollar, right? Which is really rare, and it's a way to give back to subscribers, especially since real estate companies generally sell at a 2-to-1 valuation, which means it's kind of like you're getting 50% off. Obviously, those are established real estate companies, but what we think we can do is we could actually end up selling for an even greater multiple in the future with some of the great things that we're doing with HouseHack, trying to create the vanguard of real estate over the long term. It's my dream to IPO that company, so I'm really excited about that. So write your calendar or mark your calendar for September 1st for that. And then stay tuned for offering circular and all of that. You could look up HouseHack on the sec.gov website. Yeah, stay tuned for that. That'll be very exciting. So yeah, let's see what else. We are now looking for some more commentary here on Nvidia. I do wonder how the Nvidia beat would affect Powell. I don't know that it really does, beyond the fact that, you know, this is not inflationary. If anything, this is near deflationary, right? AI. So this is a big tailwind for growth. And remember what I talked about in this video this morning. In my video this morning, I discussed that we want to be positioned in stocks with pricing power for growth, because I think we're going to go into a stagnation style environment. And in a stagnation style environment, we want growth. And where's growth right now? Servers, baby. and you know, where else? It's you know, hopefully solar comes back. You know, Tesla's obviously still growing, Apple's still growing, but not as much as the numbers used to be. Okay, so moving on now to this earnings call. We are 6 minutes away from the Nvidia earnings call. It's gonna be exciting. We're gonna go through it together. Also, keep in mind that at 6 p.m. today, I will be streaming the Republican debate. And then in addition to streaming the Republican debate, we will probably afterwards watch the Donald Trump, depending on how long the debate goes, we'll watch the Donald Trump video, the Tucker Carlson Trump one. Because Trump is not doing a live video, we'll watch that after the debate. I think the debate will be quite interesting. Even Nick T hinted that wage growth is at 3%. Wage growth at 3% is actually exactly what we want. Because wages represent somewhere around 70-ish%, you know, consumers driven, and therefore you actually end up with 2% inflation. The Trump video will start 5 minutes before the GOP debate. That's funny. That's funny. Okay, so looking for more on Nvidia here as we prepare for the earnings call. We are 5 minutes away from the earnings call now for Nvidia, which we'll be covering. Yeah, some comments here. If Nvidia misses earnings, the earth will explode. No kidding. Nvidia has blessed the entire NASDAQ. Also true. I wonder what it's doing to yields. That'll tell you what's going on with bonds, bond market expectations. Yields falling. Yeah. So I'm happy I played I played TMF decently on that. I went long on TMF on Monday. So yeah. All right. So then we've got 3.5 minutes to go. Eric, that's really nice of you to say here. Eric shouts up and says, buy his courses if you haven't. Kevin's courses are worth every penny. Hell, the live streams alone are worth the cost of entry. Talking about the course member live streams. Oh, well, yeah, thank you for that. That's really cool. Yeah, we try our best every single day analyzing earnings in the market and everything that's going on. So it's fun. I thoroughly enjoy finance. Every bit of it too, real estate or otherwise. All right, so now we are just waiting for Nvidia earnings to start. The earnings call is set for to start in 3 minutes. And looking for a little bit more Nvidia commentary here. Let's see here. I mean, it's just incredible. This is an example of absolute pricing power. I wonder what my exposure to Nvidia is right now. I think it's like 6% or something like that. Obviously, everyone wishes it was greater at this point. Yep, it's 6%. But I mean, this is like a suggestion that maybe Nvidia needs to take the place of like an Apple or something like that in someone's portfolio. I think that's very interesting. All right, we are 2 minutes away. 2 minutes to go. Let's listen. Let's see if they're saying anything yet. Nope. We just have music. Very well. Music is playing. What I also want to look at is the pricing for H100 rental server. So like if I wanted to rent a dedicated server for an H100, I wonder how much they're costing me right now. Wow. Can I rent these or did you just buy them right now? I mean, this is pretty incredible. I should put this up on screen. This is pretty wild. Can we do rental? Rather, oh, there it is. Lambda Cloud. All right, I'll just read it off here because I want to keep this earnings up. So they're still trying to rent out for $110 an hour. There. Oh no, H100 Nvidias are costing you $2 an hour right now. And if you want 8 of them, it'll cost you $20.72 an hour. Okay, well, why? Oh, because that's the H100 SXM versus the PCI. Wow. The A100 is costing you about $110 an hour right now. I don't think those prices have come down right now. That's on-demand cloud pricing. So, I mean, think about it. What's the break-even cost on those? If I buy an H100 for $20,000, you know, I have to run this thing for 2,000 hours basically to break even if I'm Lambda. And 10,000 hours, if I can run that 24 hours a day, 7 days a week, it would still take me a year to break even on the chip investment. But see, the good thing is Nvidia doesn't care. You know, let these companies rent them out. But there'll be compression in the service for that pricing, and Nvidia will make their money. This is, and that's the thing, is that's what all the companies want right now. Is, do you want the B class chip? No. Anyway, let's see if the call started. Nope. Waiting for the call to start. Tom's Hardware. Nvidia makes nearly 1,000% profit on H100. Of course, because they can just mark them up. Tom's Hardware is a great website, by the way. They could just mark them up because there's so little supply. It's brilliant. Still waiting for the call to start. 823% profit percentage for each H100 accelerator it sells. This is based on a researcher on the street. They sell for 25 to 30K a piece. Wow. Cost is like $3,000 to manufacture. Oh my God. All right. Still waiting for the call to start. All right. This will start any moment now.
Second quarter earnings call. Today's conference is being recorded. All lines have been placed on mute to prevent any background noise.
Let me know if this audio level is okay. If you could give me a little feedback on the audio level, please.
Press the star key followed by the number 1 on your telephone keypad. If you'd like to withdraw your question, press star 1 once again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the second quarter of fiscal 2024. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2024. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 23rd, 2023, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. And with that, let me turn the call over to Colette.
Thanks, Simona. We had an exceptional quarter. Record Q2 revenue of $13.51 billion was up 88% sequentially and up 101% year on year, and above our outlook of $11 billion. Let me first start with data center. Record revenue of $10.32 billion was up 141% sequentially and up 171% year on year. Data center compute revenue nearly tripled year on year, driven primarily by accelerating demand from cloud service providers and large consumer internet companies for our HGX platform the engine of generative AI and large language models. Major companies including AWS, Google Cloud, Meta, Microsoft Azure, and Oracle Cloud, as well as a growing number of GPU cloud providers, are deploying in volume HGX systems based on our Hopper and Ampere architecture Tensor Core GPUs. Networking revenue almost doubled year on year, driven by our end-to-end InfiniBand networking platform.
There it
the
is,
gold
InfiniBand.
standard for AI. There is tremendous demand for NVIDIA accelerated computing and AI platforms. Our supply partners have been exceptional in ramping capacity to support our needs. Our data center supply chain, including HGX, with 35,000 parts and highly complex networking, has been built up over the past decade. We have also developed and qualified additional capacity and suppliers for key steps in the manufacturing process, such as CoWoS packaging. We expect supply to increase each quarter through next year. By geography, data center growth was strongest in the U.S. as customers direct their capital investments to AI and accelerated computing. China demand was within the historical range of 20 to 25% of our data center revenue, including compute and networking solutions. At this time, let me take a moment to address recent reports on the potential for increased regulations on our exports to China. We believe the current regulation is achieving the intended results. Given the strength of demand for our products worldwide, we do not anticipate that additional export restrictions on our data center GPUs, if adopted, would have an immediate material impact to our financial results. However, over the long term, restrictions prohibiting the sale of our data center GPUs to China, if implemented, will result in a permanent loss of an opportunity for the U.S. industry to compete and lead in one of the world's largest markets. Our cloud service providers drove exceptional strong demand for HGX systems in the quarter as they undertake a generational transition to upgrade their data center infrastructure for the new era of accelerated computing and AI. The NVIDIA HGX platform is culminating of nearly 2 decades of full stack innovation across silicon, systems, interconnects, networking, software, and algorithms. Instances powered by the NVIDIA H100 Tensor Core GPUs are now generally available at AWS, Microsoft Azure, and several GPU cloud providers, with others on the way shortly. Consumer internet companies also drove the very strong demand. Their investments in data center infrastructure, purpose-built for AI, are already generating significant returns. For example, Meta recently highlighted that since launching Reels and AI recommendations have driven a more than 24% increase in time spent on Instagram.
Wow.
Enterprises are also racing to deploy generative AI, driving strong consumption of NVIDIA-powered instances in the cloud, as well as demand for on-premise infrastructure. Whether we serve customers in the cloud or on-prem, through partners or direct, their applications can run seamlessly on NVIDIA AI enterprise software with access to our acceleration libraries, pre-trained models, and APIs. We announced a partnership with Snowflake to provide enterprises with accelerated paths to create customized generative AI applications using their own proprietary data, all securely within the Snowflake data cloud. With the NVIDIA NeMo platform for developing large language models, enterprises will be able to make custom LLMs for advanced AI services, including chatbots, search, and summarization, right from the Snowflake data cloud. Virtually every industry can benefit from generative AI. For example, AI co-pilots, such as those just announced by Microsoft, can boost the productivity of over 1 billion office workers and tens of millions of software engineers. Billions of professionals in legal services, sales, customer support, and education will be available to leverage AI assistants trained in their field. AI co-pilots and assistants are set to create new multi-hundred-billion-dollar market opportunities for our customers. We are seeing some of the earliest applications of generative AI in marketing, media, and entertainment. WPP, the world's largest marketing and communication services organization, is developing a content engine using NVIDIA Omniverse to enable artists and designers to integrate generative AI into 3D content creation. WPP designers can create images from text prompts while responsibly trained generative AI tools and content from NVIDIA partners such as Adobe and Getty Images, using NVIDIA Picasso, a foundry for custom generative AI models for visual design. Visual content provider Shutterstock is also using NVIDIA Picasso to build tools and services that enable users to create 3D scene backgrounds with the help of generative AI. We partnered with ServiceNow and Accenture to launch the AI Lighthouse program, fast-tracking the development of enterprise AI capabilities. AI Lighthouse unites the ServiceNow enterprise automation platform and engine with NVIDIA accelerated computing and with Accenture consulting and deployment services. We are collaborating also with Hugging Face to simplify the creation of new and custom AI models for enterprises. Hugging Face will offer a new service for enterprises to train and tune advanced AI models powered by NVIDIA DGX Cloud. And just yesterday, VMware and NVIDIA announced a major new enterprise offering called VMware Private AI Foundation with NVIDIA, a fully integrated platform featuring AI software and accelerated computing from NVIDIA with multi-cloud software for enterprises running VMware. VMware's hundreds of thousands of enterprise customers will have access to the infrastructure, AI, and cloud management software needed to customize models and run generative AI applications, such as intelligent chatbots, assistants, search, and summarization. We also announced new NVIDIA AI Enterprise Ready servers, featuring the new NVIDIA L40S GPU, built for the industry standard data center server ecosystem, and Bluefield 3 DPU data center infrastructure processor. L40S is not limited by CoWoS supply and is shipping to the world's leading server system makers. L40S is a universal data center processor designed for high volume data center scaling out to accelerate the most compute-intensive applications, including AI training and inferencing, 3D design and visualization, video processing, and NVIDIA Omniverse industrial visualization. NVIDIA AI Enterprise Ready servers are fully optimized for VMware Cloud Foundation and Private AI Foundation. Nearly 100 configurations of NVIDIA AI Enterprise Ready servers will soon be available from the world's leading enterprise IT computing companies, including Dell, HPE, and Lenovo. The GH200 Grace Hopper Superchip, which combines our ARM-based Grace CPU with Hopper GPU, entered full production and will be available this quarter in OEM servers. It is also shipping to multiple supercomputing customers, including Los Alamos National Lab and the Swiss National Computing Center. And NVIDIA and SoftBank are collaborating on a platform based on GH200 for generative AI and 5G, 6G applications. The second generation version of our Grace Hopper Superchip with the latest HBM3E memory will be available in Q2 of calendar 2024. We announced the DGX GH200, a new class of large memory AI supercomputer for giant AI language models, recommender systems, and data analytics. This is the first use of the new Nvidia NVLink switch system, enabling all of its 256 Grace Hopper superchips to work together as one, a huge jump compared to our prior generation connecting just 8 GPUs over NVLink. VGX GH200 systems are expected to be available by the end of the year. Google Cloud, Meta, and Microsoft among the first to gain access. Strong networking growth was driven primarily by InfiniBand infrastructure to connect HGX GPU systems. Thanks to its end-to-end optimization and in-network computing capabilities, InfiniBand delivers more than double the performance of traditional Ethernet for AI. For billions of dollar AI infrastructures, the value from the increased throughput of InfiniBand is worth hundreds of millions and pays for the network. In addition, only InfiniBand can scale to hundreds of thousands of GPUs. It is the network of choice for leading AI practitioners. For Ethernet-based cloud data centers that seek to optimize their AI performance, we announced NVIDIA Spectrum X, an accelerated networking platform designed to optimize Ethernet for AI workloads. Spectrum X couples the Spectrum 4 Ethernet switch with the Bluefield 3 DPU, achieving 1.5x better overall AI performance and power efficiency versus traditional Ethernet. Bluefield 3 DPU is a major success. It is in qualification with major OEMs and ramping across multiple CSPs and consumer internet companies. Now moving to gaming. Gaming revenue of $2.49 billion was up 11% sequentially and 22% year on year. Growth was fueled by GeForce RTX 40 series GPUs for laptops and desktops. End customer demand was solid and consistent with seasonality. We believe global end demand has returned to growth after last year's slowdown. We have a large upgrade opportunity ahead of us. Just 47% of our installed base have upgraded to RTX, and about 20% have a GPU with an RTX 3060 or higher performance. Laptop GPUs posted strong growth in the key back-to-school season, led by RTX 4060 GPUs. Nvidia's GPU-powered laptops have gained in popularity, and their shipments are now outpacing desktop GPUs in several regions around the world. This is likely to shift the seasonality of our overall gaming revenue a bit, with Q2 and Q3 as the stronger quarters of the year, reflecting the back-to-school and holiday build schedules for laptops. In desktop, we launched the GeForce RTX 4060 and the GeForce RTX 4060 Ti GPUs, bringing the Ada Lovelace architecture down to price points as low as $299. The ecosystem of RTX and DLSS games continued to expand. 35 new games added to DLSS support, including blockbusters such as Diablo 4 and Baldur's Gate 3. There's now over 330 RTX accelerated games and apps. We are bringing generative AI to games. At Computex, we announced NVIDIA Avatar Cloud Engine, or ACE, for games, a custom AI model foundry service. Developers can use the service to bring intelligence to non-player characters. It harnesses a number of NVIDIA Omniverse and AI technologies, including NeMo, Riva, and Audio 2Face. Now moving to professional visualization. Revenue of $375 million was up 28% sequentially and down 24% year on year. The Ada architecture ramp drove strong growth in Q2, rolling out initially in laptop workstations with a refresh of desktop workstations coming in Q3. These will include powerful new RTX systems with up to 4 NVIDIA RTX 6000 GPUs providing more than 5,800 teraflops of AI performance and 192 gigabytes of GPU memory. They can be configured with NVIDIA AI Enterprise or NVIDIA Omniverse Enterprise. We also announced 3 new desktop workstation GPUs based on the Ada generation: the NVIDIA RTX 5000, 4500, and 4000, offering up to 2x the RT core throughput and up to 2x faster AI training performance compared to the previous generation. In addition to traditional workloads such as 3D design and content creation, new workloads in generative AI, large language model development, and data science are expanding the opportunity in pro visualization for our RTX technology. One of the key themes in Jensen's keynote at SIGGRAPH earlier this month was the convergence of graphics and AI. This is where NVIDIA Omniverse is positioned. Omniverse is OpenUSD's native platform. OpenUSD is a universal interchange that is quickly becoming the standard for the 3D world, much like HTML is the universal language for the 2D internet. Together, Adobe, Apple, Autodesk, Pixar, and NVIDIA formed the Alliance for OpenUSD. Our mission is to accelerate OpenUSD development and adoption. We announced new and upcoming Omniverse Cloud APIs, including RunUSD and ChatUSD, to bring generative AI to OpenUSD workloads. Moving to automotive. Revenue was $253 million, down 15% sequentially and up 15% year-on-year. Solid year-on-year growth was driven by the ramp of self-driving platforms based on the NVIDIA Drive Orin SoC with a number of new energy vehicle makers. The sequential decline reflects lower overall automotive demand, particularly in China. We announced a partnership with MediaTek to bring drivers and passenger new experiences inside the car. MediaTek will develop automotive SoCs and integrate a new product line of NVIDIA GPU chiplets. The partnership covers a wide range of vehicle segments from luxury to entry level. Moving to the rest of the P&L, GAAP gross margins expanded to 70.1% and non-GAAP gross margin to 71.2%, driven by higher data center sales. Our data center products include a significant amount of software and complexity, which is also helping drive our gross margins. Sequential GAAP operating expenses were up 6%, and non-GAAP operating expenses were up 5%, primarily reflecting increased compensation and benefits. We returned approximately $3.4 billion to shareholders in the form of share repurchases and cash dividends. Our board of directors has just approved an additional $25 billion in stock repurchases to add to our remaining $4 billion of authorization as of the end of Q2. Let me turn to the outlook for the third quarter of fiscal 2024. Demand for our data center platform for AI is tremendous and broad-based across industries and customers. Our demand visibility extends into next year. Our supply over the next several quarters will continue to ramp as we lower cycle times and work with our supply partners to add capacity. Additionally, the new L40S GPU will help address the growing demand for many types of workloads, from cloud to enterprise. For Q3, total revenue is expected to be $16 billion, plus or minus 2%. We expect sequential growth to be driven largely by data center, with gaming and ProViz also contributing. GAAP and non-GAAP gross margins are expected to be 71.5% and 72.5%, respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are expected to be approximately $2.95 billion and $2 billion, respectively. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $100 million, excluding gains and losses from non-affiliate investments. GAAP and non-GAAP tax rates are expected to be 14.5% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight some upcoming events for the financial community. We will attend the Jefferies Tech Summit on August 30th in Chicago, the Goldman Sachs Tech Conference on September 5th in San Francisco, the Evercore Semiconductor Conference on September 6th, as well as the Citi Tech Conference on September 7th, both in New York, and the BofA Virtual AI Conference on September 11th. Our earnings call to discuss the results of our third quarter of fiscal 2024 is scheduled for Tuesday, November 21st. Operator, we will now open the call for questions. Could you please poll for questions for us? Thank you.
Thank you.
Where's
At this
Jensen?
time, I'd like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We ask that you please limit yourself to one question. We'll pause for just a moment to compile the Q&A roster. We'll take our first question from Matt Ramsay with TD Cowen. Your line is now open.
Yes, thank you very much. Good afternoon. Obviously, remarkable results. Jensen, I wanted to ask a question of you regarding the really quickly emerging application of large model inference. So I think it's pretty well understood by the majority of investors that you guys have a very much a lockdown share of the training market. A lot of the smaller model inference workloads have been done on ASICs or CPUs in the past. And with many of these GPT and other really large models, there's this new workload that's accelerating super duper quickly on large model inference. And I think your Grace Hopper Superchip products and others are pretty well aligned for that. But could you maybe talk to us about how you're seeing the inference market segment between small model inference and large model inference, and how your product portfolio is positioned for that? Thanks.
Yeah, thanks a lot. So let's take a quick step back. These large language models are pretty phenomenal. It does several things, of course. It has the ability to understand unstructured language. But at its core, what it has learned is the structure of human language, and it has encoded or compressed within it, a large amount of human knowledge that it has learned by the corpuses that it studied. What happens is you create these large language models, and you create as large as you can, and then you derive from it smaller versions of the model, essentially teacher-student models. It's a process called distillation. And so when you see these smaller models, it's very likely the case that they were derived from or distilled from or learned from larger models. Just as you have professors and teachers and students and so on and so forth. And you're going to see this going forward. And so you start from a very large model, and it has a large amount of generality and generalization and what's called zero-shot capability. And so for a lot of applications and questions or skills that you haven't trained it specifically on, these large language models miraculously has the capability to perform them. That's what makes it so magical. On the other hand, you would like to have these capabilities in all kinds of computing devices, and so what you do is you distill them down. These smaller models might have excellent capabilities in a particular skill, but they don't generalize as well. They don't have what is called as good zero-shot capabilities. And so they all have their own unique capabilities, but you start from very large models.
Okay, next we'll go to Vivek Arya with BofA Securities. Your line is now open.
Thank you. Just had a quick clarification and a question. Colette, if you could please clarify how much incremental supply do you expect to come online in the next year, you think it's up, 20, 30, 40, 50%. So just any sense of how much supply, because you said it's growing every quarter. And then, Jensen, the question for you is, when we look at the overall hyperscaler spending, that pie is not really growing that much. So what is giving you the confidence that they can continue to carve out more, off that pie for a generative AI? Just give us your sense of, how sustainable is this demand as we look over the next 1 to 2 years? So, if I take your implied Q3 outlook of data center, 12, 13 billion, what does that say about how many servers are already AI accelerated? Where is that going? So just give us some confidence that the growth that you are seeing is sustainable into the next 1 to 2 years.
So thanks for that question regarding our supply. Yes, we do expect to continue ramping our supply over the next quarters as well as into next fiscal year. In terms of percent, that's not something that we have here. It is a work across so many different suppliers, so many different parts of building an HGX and many of our other new products that are coming to market. But we are very pleased with both the support that we have with our suppliers and the long time that we've spent with them improving this supply.
The world has something along the lines of about $1 trillion worth of data centers installed in the cloud and enterprise and otherwise. And that $1 trillion of data centers is in the process of transitioning into accelerated computing and generative AI. We're seeing two simultaneous platform shifts at the same time. One is accelerated computing, and the reason for that is because it's the most cost-effective, most energy-effective, and the most performant way of doing computing now. And so what you're seeing, and then all of a sudden, enabled by generative AI, enabled by accelerated computing, generative AI came along. And this incredible application now gives everyone two reasons to transition, to do a platform shift from general purpose computing, the classical way of doing computing, to this new way of doing computing, accelerated computing. There's about $1 trillion worth of data centers, call it $250 billion of capital spend each year. You're seeing that data centers around the world are taking that capital spend and focusing it on the two most important trends of computing today, accelerated computing and generative AI. And so I think this is not a near-term thing. This is a long-term industry transition, and we're seeing these two platform shifts happening at the same time.
Yeah, I agree with it. Well said.
Next, we go to Stacy Rasgon with Bernstein Research. Your line's open.
Hi, guys. Thanks for taking my question. I was wondering, Colette, if you could tell me, how much of data center in the quarter, maybe even the guide, is systems versus GPU. I'm like DGX versus just the H100. What I'm really trying to get at is how much is pricing or content, or however you want to define that, versus units actually driving the growth going forward. Can you give us any color around that?
Sure, Stacey. Let me help. Within the quarter, our HGX systems were a very significant part of our data center as well as our data center growth that we had seen. Those systems include our HGX of our Hopper architecture, but also our Ampere architecture. Yes, we are still selling both of these architectures for in the market. Now, when you think about that, what does that mean from both the systems as a unit, of course, is growing quite substantially, and that is driving in terms of the revenue increases. So both of these things are the drivers of the revenue inside data center. Our DGXs are always a portion of additional systems that we will sell. Those are great opportunities for enterprise customers and many other different types of customers that we're seeing even in our consumer internet companies. Now, the importance of there is also coming together with software that we sell with our DGXs, but that's a portion of our sales that we're doing. The rest of the GPUs, we have new GPUs coming to market that we talk about, the L40S, and they will add continued growth going forward. But again, the largest driver of our revenue within this last quarter was definitely the HDX system.
And Stacy, if I could just add something, you say it's H100, and I know you know what your mental image in your mind, but the H100 is 35,000 parts, 70 pounds, nearly 1 trillion transistors in combination. Takes a robot to build, well, many robots to build, because it's 70 pounds to lift. And it takes a supercomputer to test a supercomputer. And so these things are technology marvels, and the manufacturing of them is really intensive. And so I think we call it H100 as if it's a chip that comes off of a fab, but H100s go out really as HGX and Internet World's hyperscalers, and they're really quite large system components, if you will.
Next, we go to Mark Lipacis with Jefferies. Your line is now open.
Hi, thanks for taking my question, and congrats on the success. Jensen, it seems like a key part of the success, your success in the market, is delivering the software ecosystem along with the chip and the hardware platform. And I had a two-part question on this. I was wondering if you could just help us understand the evolution of your software ecosystem, the critical elements, and is there a way to quantify your lead on this dimension, like how many person years you've invested in building it? And then part two, I was wondering if you would care to share with us your view on what percentage of the value of the NVIDIA platform is hardware differentiation versus software differentiation. Thank you.
Yeah, Mark, I really appreciate the question. Let me see if I could use some metrics. So we have a runtime called NVIDIA AI Enterprise. This is one part of our software stack, and this is if you will, the runtime that just about every company uses for the end-to-end of machine learning, from data processing, the training of any model that you like to do on any framework you like to do, the inference, and the deployment. The scaling it out into a data center. It could be a scale out for a hyperscale data center. It could be a scale out for enterprise data center, for example, on VMware. You can do this on any of our GPUs. We have hundreds of millions of GPUs in the field and millions of GPUs in the cloud, in just about every single cloud. It runs in a single GPU configuration, as well as multi-GPU per compute or multi-node. It also has multiple sessions or multiple computing instances per GPU. So from multiple instances per GPU to multiple GPUs, multiple nodes, to entire data center scale. So this runtime called NVIDIA AI Enterprise has something like 4,500 software packages, software libraries, and has something like 10,000 dependencies among each other. And that runtime is, as I mentioned, continuously updated and optimized for our install base, for our stack. And that's just one example of what it would take to get accelerated computing to work. The number of code combinations and type of application combinations is really quite insane. And it's taken us 2 decades to get here. But what I would characterize as probably the elements of our company, if you will, are several. I would say number one is architecture. The flexibility, the versatility, and the performance of our architecture makes it possible for us to do all the things that I just said. From data processing to training to inference, for pre-processing of the data before you do the inference to the post-processing of the data, tokenizing of languages so that you could then train with it. The workflow is much more intense than just training or inference. But anyways, that's where we'll focus, and it's fine. But when people actually use these computing systems, it's quite requires a lot of applications. And so the combination of our architecture makes it possible for us to deliver the lowest cost of ownership. And the reason for that is because we accelerate so many different things. The second characteristic of our company is the installed base. You know, you have to ask yourself, why is it that all the software developers come to our platform? And the reason for that is because software developers seek a large installed base so that they can reach the largest number of end users so that they could build a business or get a return on the investments that they make. And then the third characteristic is reach. We're in the cloud today, both for public-facing cloud, because we have so many customers that use it, so many developers and customers that use our platform. CSPs are delighted to put it up in the cloud. They use it for internal consumption, you know, to develop and train and to operate recommender systems or search or data processing engines and whatnot, all the way to training and inference. And so we're in the cloud, we're in enterprise. Yesterday, we had a very big announcement. It's really worthwhile to take a look at that. VMware is the operating system of the world's enterprise. And we've been working together for several years now. And we're going to bring together we're going to bring generative AI to the world's enterprises, all the way out to the edge. And so reach is another reason. And because of reach, all of the world's system makers are anxious to put NVIDIA's platform in their systems. And so we have a very broad distribution from all of the world's OEMs and ODMs and so on and so forth because of our reach. And then lastly, because of our scale and velocity. You know, we were able to sustain this really complex stack of software and hardware and networking and compute and across all of these different usage models and different computing environments. And we're able to do all this while accelerating the velocity of our engineering. You know, it seems like we're introducing a new architecture every 2 years. Now we're introducing a new architecture, a new product just about every 6 months. And so these properties make it possible for the ecosystem to build their company and their business on top of us. And so those you know, in combination makes us special.
Next, we'll go to Atif Malik with Citi. Your line's open.
Hi, thank you for taking my question and great job on the results and outlook. Colette, I have a question on the CoWoS-less L40S you guys talked about. Any idea how much of the supply tightness can L40S help with? And if you can talk about the incremental profitability or gross margin contribution from this product. Thank you.
Yeah, Atif, let me take that for you. The L40S is really designed for a different type of application. H100 is designed for large-scale language models and processing just very large models and a great deal of data. And so that's not L40's focus. L40's focus is to be able to fine-tune models, fine-tune pre-trained models, and it'll do that incredibly well. It has a transformer engine. It's got a lot of performance. You can get multiple GPUs in a server. It's designed for hyperscale scale-out, meaning it's easy to install L40S servers into the world's hyperscale data centers. It comes in a standard rack, standard server, and everything about it is standard. And so it's easy to install. L40S also is with the software stack around it, and along with BlueField-3, and all the work that we did with VMware and the work that we did with Snowflake and ServiceNow and so many other enterprise partners. L40S is designed for the world's enterprise IT systems. And that's the reason why HPE, Dell, and Lenovo and some 20 other system makers building about 100 different configurations of enterprise servers are going to work with us to take generative AI to the world's enterprise. And so L40S is really designed for a different different type of scale out, if you will. It's of course large language models. It's of course generative AI, but it's a different use case. And so the L40S is off to a great start, and the world's enterprise and hyperscalers are really clamoring to get L40S deployed.
Okay, next we'll go to Joe Moore with Morgan Stanley. Your line is now open.
Great, thank you. I guess the thing about these numbers that's so remarkable to me is the amount of demand that remains unfulfilled. Talking to some of your customers, as good as these numbers are, you sort of more than tripled your revenue in a couple of quarters. There's a demand in some cases for multiples of what people are getting. So can you talk about that? How much unfulfilled demand do you think there is? And you talked about visibility extending into next year. Do you have line of sight into when you'll get to see a supply-demand equilibrium here?
Yeah, we have excellent visibility through the year and into next year. And we're already planning the next generation infrastructure with the leading CSPs and data center builders. The demand, the easiest way to think about the demand is the world is transitioning from general purpose computing to accelerated computing. That's the easiest way to think about the demand. The best way for companies to increase their throughput, improve their energy efficiency, improve their cost efficiency, is to divert their capital budget to accelerated computing and generative AI. Because by doing that, you're going to offload so much workload off of the CPUs that the available CPUs in your data center will get boosted. And so what you're seeing companies do now is recognizing the tipping point here, recognizing the beginning of this transition, and diverting their capital investment to accelerated computing and generative AI. And so that's probably the easiest way to think about the opportunity ahead of us. This isn't a singular application that is driving the demand, but this is a new computing platform, if you will, a new computing transition that's happening. And data centers all over the world are responding to this and shifting, in a broad-based way.
Okay, next we go to Toshiya Hari with Goldman Sachs. Your line is now open.
Hi, thank you for taking the question. I had one quick clarification question for Colette and then another one for Jensen. Colette, I think last quarter you had said CSPs were about 40% of your data center revenue, consumer internet 30%, enterprise 30%. Based on your remarks, it sounded like CSPs and consumer internet may have been a larger percentage of your business. If you can kind of clarify that or confirm that, that would be super helpful. And then Jensen, a question for you. Given your position as the key enabler of AI, the breadth of engagements and the visibility you have into customer projects, I'm curious how confident you are that there will be enough applications or use cases for your customers to generate a reasonable return on their investments. I guess I asked the question because there is a concern out there that there could be a bit of a pause in your demand profile in the out years. Curious, if there's enough breadth and depth there to support a sustained increase in your data center business going forward. Thank you.
Okay, so thanks, Toshiya, on the question regarding our types of customers that we have in our data center business. And we look at it in terms of combining our compute as well as our networking together. Our CSPs, our large CSPs, are contributing a little bit more than 50% of our revenue within Q2. And the next largest category will be our consumer internet companies. And then the last piece of it will be our enterprise and high performance computing.
Toshiya, I'm reluctant to guess about the future. And so I'll answer the question from the first principled computer science perspective. It is recognized for some time now that general purpose computing is just not, and brute forcing general purpose computing, using general purpose computing at scale, is no longer the best way to go forward. It's too energy costly, it's too expensive, and the performance of the applications are too slow. And finally, the world has a new way of doing it. It's called accelerated computing, and what kicked it into turbocharge is generative AI. But accelerated computing could be used for all kinds of different applications that's already in the data center. And by using it, you offload the CPUs. You save a ton of money, an order of magnitude in cost and order of magnitude in energy, and the throughput is higher. And that's what the industry is really responding to. Going forward, the best way to invest in a data center is to divert the capital investment from general purpose computing and focus it on generative AI and accelerated computing. Generative AI provides a new way of generating productivity, a new way of generating new services to offer to your customers, and accelerated computing helps you save money and save power. And the number of applications is well, tons. Lots of developers, lots of applications, lots of libraries. It's ready to be deployed. And so I think the data centers around the world recognize this, that this is the best way to deploy resources, to deploy capital going forward for data centers. This is true for the world's clouds, and you're seeing a whole crop of new GPU specialized cloud service providers. One of the famous ones is CoreWeave, and they're doing incredibly well. But you're seeing the regional GPU specialists, service providers all over the world now. And it's because they all recognize the same thing, that the best way to invest your capital going forward is to put it into accelerated computing and generative AI. We're also seeing that enterprises want to do that. But in order for enterprises to do it, you have to support the management system, the operating system, the security and software-defined data center approach of enterprises, and that's called VMware. And we've been working several years with VMware to make it possible for VMware to support not just the virtualization of CPUs, but the virtualization of GPUs, as well as the distributed computing capabilities of GPUs, supporting NVIDIA's Bluefield for high-performance networking. And all of the generative AI libraries that we've been working on is now going to be offered as a special SKU by VMware's sales force, which is, as we all know, quite large, because they reach several 100,000 VMware customers around the world. And this new SKU is going to be called VMware Private AI Foundation. And this will be a new SKU that makes it possible for enterprises. And in combination with HP, Dell, and Lenovo's new server offerings based on L40S, any enterprise could have a state-of-the-art AI data center and be able to engage generative AI. And so I think the answer to that question is hard to predict exactly what's going to happen quarter to quarter. But I think the trend is very, very clear now, that we're seeing a platform shift.
Next, we'll go to Timothy Arcuri with UBS. Your line is now open.
Thanks a lot. Can you talk about the attach rate of your networking solutions to your to the compute that you're shipping? In other words, is like half of your compute shipping with your networking solutions? More than half, less than half, and is this something that maybe you can use to prioritize allocation of the GPUs? Thank you.
Well, working backwards, we don't use that to prioritize the allocation of our GPUs. We let customers decide what networking they would like to use. And for the customers that are building very large infrastructure, InfiniBand is, I hate to say it, kind of a no-brainer. And the reason for that, because the efficiency of InfiniBand is so significant, some 10, 15, 20% higher throughput for $1 billion infrastructure translates to enormous savings. Basically, the networking is free. And so if you have a single application, if you will, infrastructure, or it's largely dedicated to large language models or large AI systems, InfiniBand is really a terrific choice. However, if you're hosting for a lot of different users and Ethernet is really core to the way you manage your data center, we have an excellent solution there that we just recently announced, and it's called Spectrum X. Well, we're going to bring the capabilities, if you will, not all of it, but some of it, of the capabilities of InfiniBand to Ethernet, so that we can also within the environment of Ethernet enable you to get excellent generative AI capabilities. So Spectrum X is just ramping now. It requires BlueField-3, and it supports both our Spectrum 2 and Spectrum 3 Ethernet switches, and the additional performance is really spectacular. And BlueField-3 makes it possible, and a whole bunch of software that goes along with it. Bluefield, as all of you know, is a project really dear to my heart, and it's off to just a tremendous start. I think it's a home run. And this is the concept of in-network computing and putting a lot of software in the computing fabric is being realized with BlueField-3, and it is going to be a home run.
Our final question comes from the line of Ben Ritzis with Milius. Your line is now open.
Hi, good afternoon, good evening. Thank you for the question and putting me in here. My question is with regard to DGX Cloud. Can you talk about the reception that you're seeing and how the momentum is going? And then Colette, can you also talk about your software business? What is the run rate right now, and the materiality of that business? And it does seem like it's already helping margins a bit. Thank you very much.
DGX Cloud's strategy, let me start there. DGX Cloud's strategy is to achieve several things. Number one, to enable a really close partnership between us and the world CSPs. We recognize that many of we work with some 30,000 companies around the world. 15,000 of them are startups. Thousands of them are generative AI companies. And the fastest growing segment, of course, is generative AI. We're working with all of the world's AI startups. And ultimately, they would like to be able to land in one of the world's leading clouds. And so we built DGX Cloud as a footprint inside the world's leading clouds, so that we could simultaneously work with all of our AI partners and help land them easily in one of our cloud partners. The second benefit is that it allows our CSPs and ourselves to work really closely together to improve the performance of hyperscale clouds, which is historically designed for multi-tenancy and not designed for high-performance distributed computing like generative AI. And so to be able to work closely architecturally, to have our engineers work hand in hand to improve the networking performance and the computing performance has been really powerful, really terrific. And then thirdly, of course, NVIDIA uses very large infrastructures ourselves. And our self-driving car team, our NVIDIA research team, our generative AI team, our language model team, the amount of infrastructure that we need is quite significant. And none of our optimizing compilers are possible without our DGX systems. Even compilers these days require AI, and optimizing software and infrastructure software requires AI to even develop. It's been well publicized that our engineering uses AI to design our chips. And so So our own consumption of AI, our robotics team, so on and so forth, Omniverse team, so on and so forth, all needs AI. And so our internal consumption is quite large as well, and we land that in DGX Cloud. And so DGX Cloud has multiple use cases, multiple drivers, and it's been off to just an enormous success. And our CSPs love it, the developers love it, and our own internal engineers are clamoring to have more of it. And it's a great way for us to engage and work closely with all of the AI ecosystem around the world.
And let's see if I can answer your question regarding our software revenue. In part of our opening remarks that we made as well, remember, software is a part of almost all of our products, whether they are data center products, GPU systems, or any of our products within gaming and our future automotive products. You're correct. We're also selling it in a standalone business. And that standalone software continues to grow, where we are providing both the software services upgrades across there as well. Now, we're seeing at this point probably hundreds of millions of dollars annually for our software business. And we are looking at NVIDIA AI Enterprise to be included with many of the products that we're selling, such as our DGX, such as our PCIe versions of our H100. And I think we're going to see more availability even with our CSP marketplaces. So we're off to a great start, and I do believe we'll see this continue to grow going forward.
And that does conclude today's question and answer.
All right, let's do a summary of all the goodness that happened here. Keep in mind, I'll be streaming the Trump stuff in 3 hours along with the Republican debate. Probably the Republican debate and then the Trump stuff, but we'll figure it out. That is starting at about 5:55, so it's about 3 hours from now. All right, let's do a summary here on NVIDIA. Well, holy smokes, NVIDIA knocked it out of the park with earnings, implying maybe artificial intelligence isn't a flash in the pan. Maybe just because people aren't necessarily incorporating AI into everything they're doing in their lives yet, doesn't necessarily mean that companies, especially big CSPs, also known as cloud service providers, aren't throwing every bit of coal they have into the furnace of artificial intelligence. I think that is a sign that AI has massive staying power, even if it's just starting to come to consumers. In other words, even if consumers might not wake up every day and say, I want AI, the companies that know to use AI are the cloud service providers and all the software companies built on top of that layer. In other words, your Amazon, your Meta, Facebook, your Google, and your Microsoft are going to plow money into AI data centers. So that way, other software companies like Snowflake or maybe Palantir or whatever can make more data-based and provide more data-based insights and conclusions to their customers and therefore sell more software, whether that's in cybersecurity, business analytics, whatever. Point is, you don't have to rely on normal people walking down the street going, oh, yeah, I use GPT all day long. Who cares? Oh, what? Maybe 50% of people have actually heard about it when surveyed in the United States. Maybe 20% have actually tried it. And maybe half of those 20% actually end up using it every single day. So I bet the actual AI use of people is probably only somewhere around like 1 in 10 people actually using AI practically on a daily basis now. But it's the cloud service providers that know this is the next frontier. And this is what's motivated Jensen to say, which he said in the last earnings call as well. We made a video about how this could happen and that this could double down. The cloud service providers are going to make the investment. And whether or not the software actually works, they're betting on it and the chips will sell. Well, that's what's happening. But what's worth noting is Jensen mentioned these cloud service providers right now are spending about $250 billion every single year on capital expenditures for data centers. And he expects a large portion of that to shift over to generative AI and accelerate compute. And this is basically what NVIDIA is providing chips for. And so that is what brings us to this incredible beat. And we're going to go through the numbers, but we'll also do some brief projections here to get into, is this all just hype or is this real? The reality is when a company can offer $3 billion in buybacks in just the last 3 months, they got some money. But it's not just $3 billion in buybacks over the last 3 months or $1.2 billion in debt paydown. It's that they just authorized another $25 billion in buybacks because their cash flow is huge. $6 billion of free cash flow in 6 months. That works out to $24 billion of free cash flow per year. This is now a $1 trillion company by market cap. They're paying out close to $1 billion or around $32,000 per 3 months on average to their employees in stock-based compensation. It's also worth noting they've got about $16 billion in cash, but again, that's growing by about $6 billion every 3 months. Crazy. They've got total debt sitting at about $20 billion when you factor out their leases, which means they can basically pay off all their debt and pay out massive buybacks, which is great. That is the tax effective way to get dividends, basically, right? Because with buybacks, you push the stock up. People can choose to sell the stock if they want and choose to pay the taxes rather than being forced to pay the taxes. We actually look at the numbers. I want you to pay specific attention to the R&D numbers and the growth numbers of the expenses. In fact, if we jump on over, I want to say I wrote the notes down a little bit. Whatever, we'll just look at them here. The point is the R&D numbers aren't actually moving that much based on their growth. Look at their growth. You 2x'd revenue growth over the last 3 months, year over year. You grew them 38% with the last 6 months compared to the last 6 months prior, meaning a lot of that growth is happening likely in the last 3 months. So you massively are exploding revenues. But what are you doing in terms of R&D and sales? You're barely growing them. Sales barely moved up. I mean, that's about a 5% move in sales here, while they doubled their revenues on a 6-month period, 38%, and only a 5% move in sales. That's because these Nvidia chips and systems are selling themselves. Their R&D, folks, they already developed it. Now you just start working on next generation. So it's not like they're having to blow up their R&D expenses. They pop them up less than 10% here. Call it about 10% to make math, just simple rounded numbers here. So you're barely moving sales. You're barely moving R&D, but you're milking tendies. Your margin is going up. Your margin actually moved up in the last quarter compared to your last 6 months from about 68.1% gross profit to 70%. So you're actually making more money as you're selling more. Keep in mind, they've got insane profit. These H100s are expected to have a profit margin, expected to cost like $3,000. But because there's such little supply, they're basically selling them for like $25,000 to $30,000, a potential 1,000% markup. And some folks are like, hey, isn't that at some point going to compress margins? And the idea here is not necessarily, because if a small portion of your revenue right now is H100s, you're selling at 1,000% profit, maybe 800% margin, whatever profit margin, whatever. Eventually, as you move to that being a larger percentage and you get more in line with selling it for maybe like a 2x profit, right? Or a 70% gross profit, that's okay because you're growing the quantity you're able to supply. And in the earnings call, we heard, hey, they are ramping as much as they can and working with their suppliers on ramping to get these chips out the door as fast as possible. They said they're happy with the suppliers, but let's be clear, they said they expect to be ramping through 2024. So we're still in an 18-month ramp cycle for these chips and actually being able to manufacture enough of these chips. They just can't get enough of them out the door. This is important. This is a very, very big indication that NVIDIA has massive, massive pricing power. And remember, it's not consumers buying this stuff. It's the Microsofts, the Meta, the Amazon, the Google. You could break down chip data all day long. The point is, they told us on their earnings call, 50% of their customers are cloud service providers. That's where 50% of their data center revenue is coming from. Cloud service providers. After that, you're looking at about, I think it was, let me see here. I'll give you the exact numbers to confirm. So 50% was cloud service providers. The next was a consumer internet at about 25%, and then enterprise. It's worth noting enterprise was actually still towards the end. So it's not actually yet enterprise that's providing most of the revenue for Nvidia. But then again, most of the enterprise customers are going to go to like a VMware and go, look, we don't understand this whole AI stuff. We're not going to buy Nvidia chips. We just want to like just give us the product. Well, Nvidia just partnered with VMware to provide the product. So then VMware and the other cloud service providers can invest even more in chips. It's absolutely incredible. So anywho, let's keep going here. So this is a big deal. Okay, what else do we see here? So this is the income statement. We saw the balance sheet. We saw the cash flow statement. Worth noting how much of a beat this was. You beat data center revenue by 29%. You were expecting $7.98 billion. It actually came in at $10.32 billion. Jensen says this is a new era of cloud compute. It's the same thing he said last time, except they're reiterating their staying power, saying here, look, our CUDA software stack has a moat. You want to be with Nvidia. And as a result, they're actually not having to market more. That's the thing. They're not having to market more. Everybody's going to Nvidia without them having to advertise more. That just increases their margin. They're the, hot commodity on the block and everybody wants them right now. That is pricing power. And the Nvidia H100s and the associated, HGX platforms and otherwise, they are the iPhone of artificial intelligence. And anybody who's anybody in software is making sure that they have the competitive edge. And so they're investing. And as a result, they're mostly buying Nvidia chips. The fact that gaming grew was a surprise. I've got the RTX 40, 80, and 90 in this office right here in the studio. I think they're great chips. And that segment actually grew again, beat expectations and grew. The segment that failed for Nvidia to beat expectations was automotive, driven by weak automotive demand in China. Not a surprise, since China is really expected to be going through probably a depression. Not fantastic for a company like Tesla selling cars in China, but then again, Giga Shanghai is really turning into the export market, so manufacturing these vehicles in China and then shipping them around the world. Think about some of the moats that Nvidia has. CUDA, free marketing, and they're the ones everybody talks about when you want the latest and the best product. It's kind of interesting. It's hard to find something bad here, especially when you've even got companies like Oracle going all in for these. And Jensen and their CFO suggest there is, quote, tremendous demand for these products. Now, who knows? Maybe they're just, saying it. But let's just say they just said it in the last earnings call, and they proved it in this earnings report. So you're kind of on a trajectory of believability here, especially when Facebook says when they apply AI-based recommendations, they actually increase the time people spend on Facebook or Instagram by about 24%. So generative AI and accelerate compute already affecting how much time people are spending attached to things like Instagram or YouTube or whatever. As a result, leading Facebook to want to spend even more money on these front of what do they call them? Front of app, a family of apps, FOA, family of apps software suites. So it's gonna be your Facebook.com, your Instagram, Threads, and otherwise. And Facebook, I read through the earnings report this morning with course members, and they say they spend 80% of their CapEx on their apps, not on Reality Labs. Reality Labs is only 20%. That means they're spending on data center, AI for Lattice, advertising data centers. That's where the money's going. And they're calling up Nvidia to buy chips. No doubt. Shutterstock involved with them as well for generative AI, blah, blah, blah. The U.S. is the strongest sector for this growth, although China's AI demand also sitting about 20 to 25%. So China automotive suffering, but China AI doesn't want to stay behind. This is because we might be in not an enterprise recession, but a consumer recession, where the consumer suffers, or many consumers suffer and can't spend that much on places like Target or Cheesecake or Walmart or Nike or Under Armour or Lulu or whatever. But the enterprise companies, Google and Microsoft and Amazon and Apple, these are the companies that have money to spend. and they spend billions of dollars. They're not feeling the recession. The people are feeling the recession, but not the big companies. And so who are the big companies buying from? Nvidia, whether it's for those cloud compute products, whether it's for InfiniBand, which is basically their version of Ethernet for data centers. Think about it as cabling infrastructure, network switches, server racks. It's actually connecting all of the hardware together using InfiniBand. Jensen mentioned, founder and CEO of NVIDIA, mentioned numerous times in the last earnings call, reiterated again in this time, that InfiniBand basically sells itself, because once you apply it, your cost of running a data center plummets. And we're sitting at $1 trillion legacy data center environment, and we are just at the beginning of a transition to cloud compute via accelerated compute and generative AI. And so this is not a matter of being a consumer flash in the pan or not. This is an enterprise movement into generative AI and cloud compute. As a result, all of the cloud service providers, the CSPs, are like, we better be ready for all that demand. If we build it, they will come, so to speak. And because if we don't build it, the other CSP will. So in other words, like Microsoft's like, well, if we don't build the data center, Amazon will do it and they'll take our customers, right? So they same thing with Google and otherwise. So this is actually very interesting. Regarding the sustainability of demand, there was a question about this. And they spoke about on their earnings call about they're going to be ramping well into next year. And obviously they need a lot of parts, but they see this as a long-term industry and sustainably long-term based transition. A lot of growth of various different verticals of the business, talked a lot about some of the individual chips, but they think they have excellent visibility into this year and next. And they're basically saying demand ain't going away for the next 2 years. That's visibility they have for the next 2 years. Keep in mind, I don't think the big customers, the CSPs, are fickle like consumers, where they're like, hey, we want all the AI stuff, and then they go in and cancel orders. I think the Google or whatever, the Googles of the world are kind of like, please, Microsoft, cancel so we can get more. This is literally like, hell no, why ain't canceling? Because then you're just going to take it. It's kind of brilliant when you think about it from an enterprise point of view. NVIDIA has just got to be on cloud 9 right now. And this is great for the ARM IPO, though I think the ARM IPO will create a buy the dip opportunity for NVIDIA because people will shift some money over there. I think that'll be a mistake. I think the only reason you want to shift away from NVIDIA is if you want to diversify into like real estate or something like that. But that's just to, minimize swings in your portfolios. But other than that, this is absolutely fantastic. Now, what else did we learn? Well, we learned that NVIDIA is expecting $250 million in data center spend per year. Okay, so what is actually $250 billion in data center spend per year? Let me correct myself there. NVIDIA, in my opinion, well, first of all, NVIDIA's total revenue right now is somewhere around $40 billion for the year. Let me see. The current estimate is $44 billion for the year. Data center alone, I would not be surprised if NVIDIA could end up pulling in the future 100 million out of a full 100 billion of data center spend. That'd be about 40%. But let's go a little more generic. Let's go a little more conservative, let's say, and go with 25% of $250 million, $250 billion. I wrote this down wrong. That's why I keep saying it. Just change that to a B really quick. There we go. If NVIDIA captures just 25% of that $250 billion per year spend, that's $62.5 billion of data center revenue. Right now, the data center revenue is a big portion of NVIDIA's income, but that could represent over the next year to 2 years, somewhere around a 75 to 50% growth rate for their top line earnings. And I think you'll probably end up averaging over the next few years as they continue to introduce next generation AI hardware, like the next generation H100. You're probably looking at a growth rate for this company that'll end up averaging over the next 4 years closer to 35%. Wall Street right now is only pricing in 25% growth. So I'm not here to say, oh, it's going to be 100% or 50% growth every single year for the next 4 years. But if you price in, just to show you the valuation of this, if you price NVIDIA at a 35% growth rate, Take their stock price at, say, $510, divide it by, call it $9.50 of earnings to get you to the end of this year. Their end of this year is January of 2024. That puts you at about 53.6 times earnings. Now what we're going to do is divide that to get a PEG ratio by 35%. You're looking at a 1.5 PEG. That means Nvidia is actually trading closer in valuation right now to Enphase than Tesla. Tesla is trading at a PEG of about 2.3, sitting at about a 69 PE, call it 30% growth rate on earnings. That's about a 2.3 PEG. That actually makes Nvidia's valuation extremely attractive. Now let's go back to just being even more conservative. Say their EPS only grows at 25% the way Wall Street expects over the next 4 years on average. That puts them at a 2.1 PEG, still cheaper than Tesla. Now, some people are wondering, is this potentially inflationary? No, this is actually deflationary. This is why companies are replacing more back office jobs, because they can get more done with artificial intelligence. They can get more done with cloud compute, and they need less people in back offices. So this is a deflationary force, even though it's more spend on the next generation technology. It's really incredible. So NVIDIA is phenomenally positioned here. And just with some very generic math, the numbers for NVIDIA can be absolutely phenomenal here. Again, understand data center revenue right now sitting at 10.3 billion, total revenue at 13.5. So it's obviously very clear that data center revenue is already a bulk of their revenue. It already makes up about 76% of their revenue. But if we get to 25% of that $250 billion market in the future, that's 62.5, and I expect that'll grow over time as well. And that just represents 76% because you've got gaming and automotive and these other segments as well. NVIDIA's revenue could be closer to $82 billion very quickly. Wall Street does not expect that NVIDIA's revenue is going to broach $80 billion until 2026. It'll actually probably happen in 2024 or 5. So I think this growth is going to happen a lot faster and sooner than expected. And it'll be growth for ASML. It'll be growth for TSM. It'll be growth for Intel. And it'll be growth for NVIDIA. Because this transition is not just going to be a one-time transition. It'll be, all right, we got the iPhone 1 in. Now, who's got the iPhone 2? Well, NVIDIA is already working on the iPhone 2. Well, the iPhone 3G is what the iPhone 2 was called, but you know what I mean. Anyway, this is incredibly bullish. Now, we have to sort of temper expectations here because there is this potential for the stock market to try to price in too much of that growth, right? And we are still in a very uncertain macro environment. And the level of software revenues are still questionable from companies like, Snowflake, Microsoft, and otherwise. But we did also just have Snowflake revenues and Autodesk revenues, and guess what? Both of them beat. So kind of impressive. I have to say there's little to be upset about this. What I would do, and this is not personalized financial advice for you because I don't know your personalized financial situation, but I like the idea of, and this is what I'm personally going to do, I like the idea of allocating money to stuff like Nvidia, TSM, ASML, Intel, Tesla, but I'm going to put in that basket solar. So that way, if these pick and shovel sellers do well and solar keeps sucking, that's okay. My portfolio is growing. But when solar booms and the chips start going like, okay, like we've had our run, that's when I expect the portfolio just keeps rocketing. And I think one of the nice ways to do that is through, an ETF that focuses on a strategy like that, especially since you can take advantage of some of the tax benefits that are associated with investing in ETFs, where ETFs can rebalance taxable gains. For example, about 6 weeks or so ago, the fund that I manage, we had somewhere around $4 million in gains, and we traded out of a certain stock into a different allocation. And we saved investors somewhere between $1.5 to $2 million in taxes on that because they were short-term gains. but because of the way ETFs are structured, if you set them up a certain way, you can actually reallocate without paying taxes. The ETF, you know, obviously assuming you have gains and stuff like that, talk to your CPA, right? I'm just trying to educate on how ETF structures work. So, yeah, ETF structure, very, very interesting. NVIDIA, very, very interesting. And I would balance my enthusiasm for chips and AI, especially cloud, with solar. My take. Anyway, thank you so very much for watching. Really appreciate you all, and we'll see you in the next one. Goodbye.